How could your life be different if you were more financially literate? Imagine a life where every financial decision, big or small, is made with confidence and understanding. Financial literacy isn't just about crunching numbers. It's about empowering you to make informed choices that can shape your future. It's about understanding the language of money and using it to your advantage. Financial literacy can change your life by providing essential knowledge to achieve financial freedom. With this information, you can change your life and that of your loved ones. So what is financial literacy and why does it matter? Well, financial literacy is the ability to understand and use various financial skills, including personal financial management, budgeting, and investing. Think of it like a toolkit. The more tools you have and the better you understand them, the more likely you are to make good decisions. Financial literacy matters because it's the foundation of your financial well-being and independence. It's about being able to navigate the financial landscape, make informed decisions about saving, investing, and borrowing. It's about knowing how to read and understand financial statements and even understanding basic economic concepts that affect your income and wealth. But most importantly, financial literacy empowers you. It gives you the knowledge and confidence to take control of your financial destiny rather than being controlled by it. So whether you're just starting out on your financial journey or looking to sharpen your skills, remember this. Understanding financial literacy is the first step towards a financially secure future. Setting clear financial goals is a crucial part of financial literacy. It's like setting a destination before embarking on a journey. Without clear goals, you may find yourself aimlessly wandering through the financial wilderness. Short-term financial goals could include saving for a vacation, paying off a small debt, or building an emergency fund. These goals provide immediate or near-future gratification and help build financial discipline. Long-term financial goals, on the other hand, require a bit more foresight. They might involve saving for a child's education, buying a home, or amassing a comfortable retirement nest egg. These goals won't be achieved overnight, but they provide a guiding light to steer your financial decisions. Achieving these goals requires careful planning, consistent action, and the ability to adapt when circumstances change. The journey to financial success isn't always a straight path, but with clear, well-defined goals, you'll have the roadmap you need to reach your destination. A budget is not just a record of your income and expenses, far from it. A budget is a roadmap, a guide to your financial future. It's a tool that can help you control your spending, avoid unnecessary expenses, and save more money. Imagine you're on a journey. Without a map or a compass, you're likely to get lost, right? That's what happens when you spend without a budget. You might end up somewhere you didn't intend to be, like in debt. But with a budget, you have a clear path to follow. You know exactly where your money is going and how much you're saving. It's like having a personal financial advisor guiding you towards your financial goals. Budgeting helps you identify and cut out unnecessary expenses, allowing you to save more. It gives you a clear picture of your financial health and helps you make informed decisions. Debt is not necessarily bad, but it needs to be managed wisely. It's a common misconception that all debt is harmful. In reality, there are two types of debt, good and bad. Good debt, such as student loans or mortgages, can be an investment that will generate long-term income or increase in value. Bad debt, on the other hand, includes things like credit card debt or payday loans, which do little to nothing for you and can trap you in a cycle of repayment. Managing debt effectively becomes a matter of understanding this difference and making informed decisions. It's essential to prioritize paying off high-interest, bad debt first. Consolidate your debts where possible to lower interest rates and make repayments more manageable, and always make sure you're meeting at least the minimum repayments to avoid penalties. It's all about balance and making smart choices. Your credit score is like your financial health score. Imagine it as a snapshot of your financial credibility viewed by lenders to gauge your reliability. It's shaped by a few key factors. First, payment history. Are you punctual in settling your debts? Lenders love reliability. Next, credit utilization. How much of your available credit are you using? Less is more in this case. Also, the length of your credit history, the diversity of your credit types, and recent credit applications all play a role. Why does it matter? A high credit score can unlock doors to financial opportunities. It can help you secure loans with lower interest rates, saving you money in the long run. It can make it easier to rent a home or even land a job in certain industries. So, keep an eye on your credit score, nurture it, and it will reward you. Life is full of unexpected events, and having an emergency fund can provide financial security. Picture this: your car breaks down, a sudden health issue arises, or you lose your job. These are all situations where you'd need extra cash, and that's where an emergency fund comes in. It's your financial safety net, a buffer between you and life's unforeseen expenses. So how do you build one? Start small. Aim to set aside enough money to cover at least 3 to 6 months of essential expenses. Little by little, as you consistently save, you'll see your fund grow. Prioritize it, make it a line item in your budget, and remember, this is not money for vacations or shopping sprees, it's for emergencies only. Consider keeping your fund in a separate, easily accessible account, so it's there when you need it, but not too tempting to touch otherwise. The earlier you start saving for retirement, the better off you'll be. It's not just a catchy phrase, it's a proven fact. Why? Because of something known as compound interest. Think of it as a magical snowball. The more you roll it, the more snow it gathers, and it keeps growing larger. The same principle applies to your retirement savings. When you start investing early, your money has more time to grow. Let's say you start investing just $100 a month at the age of 25 with an average annual return of 7%. By the time you reach 65, you'll have amassed over $200,000. If you had started at 35 instead, that figure drops to less than $100,000. That's the power of starting early, and the magic of compound interest at work. It's simple. The earlier you start, the more your money grows, and the better your golden years will be. Investing is a key component of financial literacy. It's not just throwing your hard-earned money into the stock market and hoping for the best. It's about understanding the different types of investments and making informed decisions based on your financial goals and risk tolerance. There are various types of investments to consider. You've got stocks, bonds, mutual funds, real estate, and even cryptocurrency. Each of these carries its own potential risks and rewards. Stocks, for instance, can provide high returns but also come with high risk. Bonds, on the other hand, are generally safer but offer lower returns. Risk is a constant factor in investing, but remember, higher risk could lead to higher returns and vice versa. It's about finding the balance that works for you. The earlier you start investing, the more time you have to reap the benefits of compound interest. As your income increases, it's easy to let your expenses increase too. This phenomenon is known as lifestyle inflation, where your living standards rise alongside your income. Suddenly, that cappuccino you used to treat yourself with once a week becomes a daily necessity. That compact car you were perfectly content with now seems too small, and you're eyeing the luxury model instead. But here's the catch: allowing your expenses to inflate with your income can be a dangerous trap. It can lead to a never-ending cycle of chasing a lifestyle that's always just a bit out of reach, no matter how much you earn. So how do you avoid this pitfall? Firstly, by being conscious about your spending decisions. Ask yourself, is this purchase really necessary? Secondly, by setting and sticking to a realistic budget. And finally, by saving and investing wisely. Financial literacy is not just for individuals, it's for families too. When we think about money, it's not just about how we earn and spend it, but how we manage it as a family unit. It's about creating a shared understanding and approach to finances. A critical part of this is teaching our children about money. By instilling financial literacy in them at a young age, we equip them with the skills and knowledge they need to navigate the financial world as they grow older. This includes understanding the value of money, the importance of saving, and the concept of budgeting. In addition, managing family finances effectively is crucial. This involves setting and sticking to a family budget, managing debts, and planning for the future, such as saving for college or retirement. Financial freedom is not just about having a lot of money. It's about having the liberty to make choices that allow you to enjoy life without the constant worry of financial constraints. It's about being unchained from the monotony of living paycheck to paycheck. Now let's talk about passive income. Imagine earning money while you sleep, or while you're on vacation. That's the beauty of passive income. It's income that requires little to no effort to earn and maintain. This can be achieved through various channels like real estate investments, royalties, dividends from stocks, or even a side business that doesn't require your constant attention. Passive income is the key to financial freedom. It allows you to generate wealth over time, providing a safety net and freeing you to pursue your passions, spend time with loved ones, or even take that dream vacation. Financial literacy is not a one-time thing, it's a lifelong journey. It's like a river that's constantly flowing, with new financial trends and information always emerging. And just as a seasoned sailor knows the importance of staying updated with the latest weather patterns, it's equally essential for us to keep up with the evolving world of finance. You see, the financial landscape is always changing. New investment opportunities arise, tax laws can shift, and the economy itself is like a living, breathing entity constantly in motion. That means the financial knowledge you have today may not serve you as well tomorrow. So how do we navigate this ever-changing river? By committing to continuous learning in financial literacy. Read books, attend seminars, listen to podcasts, engage in online courses, absorb as much knowledge as you can. And remember, every bit of new information is a stepping stone towards more confident financial decisions. So, how can financial literacy change your life? It's the question we've been exploring, and the answer is clear. Financial literacy empowers you. It is not just about understanding money, it's about using that knowledge to make informed decisions and secure your financial future. So stay financially literate and watch your life transform. Don't forget to like and subscribe for more content to help you achieve financial freedom.